Well, we're getting a little bit deeper into our trading session today on a Monday, and I'm joined now by Chris Swift of Swift Trading. He's based in Nashville. And Chris, I hope you had a good weekend. Thank you so much for joining us here today. Just wondered what you're keying in on when we look at our grain market.
You know, Marlin started off last night with a really sharply lower U.S. dollar, and I think that's what the markets are reacting to right now because the cold weather is going to maybe impact the wheat market, but it doesn't have much to do with the corn and the beans right now. So I have a feeling that lower U.S. dollar is what's really driving grain prices this morning.
Well, it is down. Now it's down 369 points on that June contract there. And you know, it has been a real choppy ride on the value of the dollar, but some analysts I've been speaking with said that they do see more downside potential there. Could that help to maybe revitalize our ag export sales for a while?
Oh, absolutely it could. And with the way the Fed is printing money, and they have stated over the last several weeks that they're not going to change their policies, so I have to believe what the Fed says. You don't fight the Fed, and if they say they're going to print more money, then that should drive the U.S. dollar lower, and that should help our exports to our agricultural products.
Well, I have heard that phrase so many times this past weekend, don't fight the Fed. That it might as well be emblazoned on everything right now. Let's take a look at our corn market, shall we, and see how we're doing with our quotes provided by bar chart. Right now, July corn, 5 1/4 higher. We're at 5.79 per bushel, and we have December 6 1/4 cents higher at 5.18 1/2. That would be about 1.5 pennies from our high of the day at this point. Well, let's take a look at our soybean trade right now. We have the July contract 9 1/4 higher at 14.31 3/4. We have bounced back about 8 cents from our earlier low, and we have November new crop soybeans now 5 3/4 cents higher at 12.79 3/4. This wheat market is very confusing, and some folks are kind of perplexed over the action here. We have July Chicago wheat had a high last night of 6.63. And now we're at 6.55 3/4. That's only 3/4 of a cent higher now. And we're within, a couple of pennies of our low of the day. In the Kansas City market here, where Tim Ross was talking about all that cold weather, well, we have July now at 6.18 3/4. That would be 2.5 cents higher, but still, we're about 7 cents off our overnight high. And in the spring wheat trade, we have July currently now at 6.74 1/2, and that is 3 1/4 cents higher there. In the cotton market, July is now currently trading 94 points higher, and we're just below 86 cents, just barely at 85.97 cents per pound. Chris, if you don't mind, we're going to take a short little break right here, and then we'll come back, and I want to get your thoughts on what's going on in our livestock trade. We had some big moves to the downside here recently, and we'll see what the prospect is this week when we come back. And we're back with Chris Swift. Let's take a look at our livestock trade. Let's go right to the live cattle board here, and our quotes provided by bar chart. Boy, it's weaker today and just kind of hovering close to our lows of the day right now. The June contract at 118.22, down 95 cents. We had been as high as 119.40 right at the open. We have the August down $1.25 now at 117.87, make it 127 lower now. Well, how about the feeder cattle? With that higher corn market today, we have had pressure in the feeders, and we have the May contract now at 140.80 on the low of the day, and we're down $2.92. And you have the August down 3.40 now at 151.15. That's only 2 ticks off our low of the day right there. All the deferreds from August on out are over $3 lower. Tons of pressure in the feeders this morning. Then you get to the lean hog trade, and we had a downward collapse late last week, the last 2 trading days last week. It's trying to pick itself up here this morning. June lean hogs got as high as 103.62, and then they kind of fell back. We've been as low as 101.10, and now we're at 102.27, right in the middle, and we're 57 cents higher. July up 42 cents at $100.12. So small gains in the lean hogs, but it's like the wheels are coming off here on the cattle complex. Technically, what does that tell you today, Chris?
Well, a lot of it is just poor feeding margins. So to the cattle feeder, he's had to experience poor feeding margins for the last 3 to 4 months. And now it's getting even worse because we lost the premium of the futures market in the live cattle. That was one thing that we felt that was enticing the cattle feeder to place cattle on feed. And now seemingly with March going to have maybe 105, 106 on feed, placed on there, that might raise our on-feed number up to about 103 to 104, and it could carry that way in through June.
So right now, the April live cattle are trading right at 120, and that, of course, is in delivery. It's about done. But June, 118.15. You know, the last livestock summary we had from Friday, I believe we were getting 120 to 121 out there. That's kind of totally opposite to what we have seen here, isn't it?
Well, and we've got a big swap in the basis. So we were carrying a negative basis for several months, and now we've swapped it to a positive basis. And I believe we've got the cattle on feed that we need to carry us through most of the summer. If the April placements are as heavy as what we've seen in the first quarter, then we should have enough product on hand for the packers to work with all the way into September.
What do the spreads tell you in the hogs?
You know, really not a lot on there other than we continue to see the lean hog index rising just a little bit. But in the hog market, we know that China has had some big steps in increasing their pork production. So I saw some numbers on Friday that suggested that they were really ramping up their pork production very efficiently now that they're getting more and more of these controlled environment hog houses built.
Okay, thank you, Chris. Appreciate the time. Chris Swift of Swift Trading in Nashville. John, back to you.